Hi everyone. In these videos, we look at concepts that are vital for your success in accounting. First off, we look today at fixed assets within our business. Now, you will remember that we are always referring to the accounting equation, which consists of three elements: assets equals owner's equity plus liabilities. Now, what are assets? And more specifically, today we look at fixed assets or non-current assets, consisting of land and buildings, vehicles, and equipment. Now, assets are items of value within our business. Fixed assets are those items of value that we buy for the business to use within the business and with the intention not to sell it again to make a profit. So fixed assets we buy or purchase for the business, but we don't want to soon sell it again to make a profit. That's not the intention of why we would purchase fixed assets for our business. Yes, indeed, you can sell your fixed assets at a later stage. Thinking, for example, about a vehicle, a delivery vehicle that's now getting very old and you want to replace it with a new vehicle. You can definitely sell that vehicle. But when you originally bought that vehicle, it was to use it within the business and to run the business successfully, not to buy the vehicle and then sell it again at a profit. So therefore, our fixed assets within our business have a lifespan of longer than a year. So we intend to keep those items for a long period of time. And our three fixed assets, as we've mentioned already, are land and buildings. And this would typically be if you buy a shop or a store, a factory, an office building, a vacant piece of land that you maybe want to develop at a later stage. All of those would fall under your land and buildings fixed assets. Secondly, our vehicles asset. This one would mainly consist of delivery vehicles that you would purchase for the business in order to run the business successfully. Lastly is our equipment fixed assets. This one consists of computers, laptops, your printers, a desk, a chair, shelving, cupboards, and so forth. The fridge in the kitchen, perhaps the kettle even, all of that would form part of your equipment fixed asset. It can very well be that businesses, especially small businesses, might not have all the fixed assets, especially when they start off. Many businesses do not own their own property or buildings, they rent it. Then you might not have a land and building fixed asset, which is perfectly fine. Many businesses do not have delivery vehicles, and then they might make use of courier services or independent delivery services if they need to deliver products or order some items in. So you might not have a vehicle's fixed asset within your business. And similarly, you might not have some equipment assets, depending on the type of business that you have. Maybe you're renting all of those as well, which is a way to go nowadays, where, especially with small businesses, where they rent their computers or they rent office space and they don't even own their own desks and chairs. Righty, that brings us then to the concept of, or the end of the concept of fixed assets. And I hope that this makes a little bit more sense now.